The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, what on earth happened to cattle futures on Tuesday? Some heavy losses in the feeder cattle complex and in fat cattle as well. Are we starting to get tired at some of these price levels? I know futures has been trying to chase this cash market, which continues to be so red hot. Let's talk about that. Take a look at the markets. Joining us now, Scott Varlick with Quimma Varlick in Sioux Center, Iowa. Scott, it's good to have you back on the show with us again. And not the best day for cattle traders, I guess, on Tuesday. What a tough market day it was.
Yeah, thanks for having me, Jesse. And you used the word tired, and that word has made my hair stand up the whole rally up because we've heard it a lot of times. But today, I think it's very accurate and fitting that it's just feeling a little bit tired here. I mean, this is fourth Tuesday in a row that we just get smashed. You know, a big story, and we've got liquidation happening, and it's a market that's really high. We know it's high. I think everybody respects it. We see this cash market, this fundamental story telling us, hey, everything's okay. We're still got room, but everybody's pretty scared, you know, and you start to throw in a little bit of outside market worries and war uncertainty. I think that's what's winning over, you know, that whole money flow term that you hear people use. It's not a really fun one to use, but it's very true right now. I mean, it's cattle producers that have a lot of risk. It's funds that have quite a few longs and looking to exit stage left. And we're all trying to get out that same door. And that's what's happening. Just too much money flow pushing this market lower today.
And I would have to think that with it being a Tuesday, of course, that's when we wrap up the commitment of traders. The week to week is Tuesday to Tuesday. And to your point about the funds, have to think that it's the funds really driving this bus here, Scott.
That's what it looks like, you know, because you've got cash prices that are good. You're starting to get some charts that look a little bit negative now. I mean, now we're all going to have to start drawing lines and retracements, and you see a few feeder gaps get filled, but because even strong cash news couldn't bail it out. You have, you know, the attitude of these producers that want to sell these cattle out front and make their big money. They have an awesome basis, and they're doing that. So we saw some of that. I mean, even for third weekend of July, we're getting some cash that's happening today that's going to be upper 230s. So some excellent prices are right around that 240 area. So, I mean, with that still there, you know, and the feeder market, as hot as it is, you know, why are we still down? Yes, that's your answer. We've got some funds liquidating, and we've got producers that know how much money they have. They're scrambling into some hedges. So, yep, there's that fund money flow. Would imagine they're going to be doing some liquidating here.
You know, and you mentioned this to me before we went on the air. You're watching the cash markets here right now a lot, and I just have to wonder, I mean, cash has been so strong for so long. When does that shoe drop in this market potentially, Scott? If futures start to pull back and liquidate, you know, when or if, you know, what happens when cash starts to do the same potentially?
Yeah, there's you know, cash prices that have led us, and today you're getting your first major video auctions that we're all getting to watch for delayed delivery cattle, and those prices are outstanding. I mean, you have that on one screen and you're watching this board crash on the other, and it just doesn't add up. It doesn't make sense. You're like, do they not see this too, what these prices are doing? It's just impressive. You know, I mean, it really just says how tight we are in cattle. That supply is tight and is going to be tight for a while. It's not something we can just rebuild overnight, but so there's quite a bit of optimism still shaking out. I mean, when you're starting to pencil some of these 900 pounders or in that range, you know, 225 break evens on a board that's sitting back there below 210, it gets pretty pretty nerve wracking to try to, you know, stick your neck out there and raise your hand on them. So still tight numbers showing up, and those cash feeders have always been what bails this market out. We'll see if it can handle some of this test here. You know, if the futures continue to break, maybe we'll finally start to see some of that slip. But as of now, we've held on pretty tight.
When do producers say enough and start that heifer retention? That's been talked about so much. When is that going to happen? When's it going to happen? And maybe starting to hear some of that happening finally here as we get into the summer of 2025, Scott.
Yeah, and that's what I think. I think it's starting to happen. We've had so many carrots dangled in front of us that we kept selling. I want to sell whatever I have. Well, we just reached that point to where we're too tight, and we know that prices are evident, and you're topping that with really good demand. So here we are. I think we've got a cow slaughter that's increased significantly year to date. We've really stopped sending so many of them to town, trying to keep some of those cows back. We've got rain in cow-calf country, north and south. We finally have an opportunity that way. Hey, I actually have some grass, actually have some feed. I'm willing to stick my neck out there and kick something extra out on grass because I can take care of her. And we saw some bangs vaccine shortages this spring. I just think that all tells me that I think we're there. We're doing it, which means tightest numbers in the feed yard right now. We're in it because that heifer is going back to rebuild a cow herd. So that's also why we're seeing such fireworks. Where are the cattle in the feed yards? So I think I'm seeing my signs, and this is a futures market. It will sniff it out ahead of time. That was 2015. 2015 was our tightest numbers. We all thought that was going to be the year we were going to put in the high. That's the year we came down because we knew those heifers were coming back. So maybe that's something the market's starting to sniff out just a little bit here.
Cattle on feed report end of the week. Will that show us any of these signs, do you think? What could that report tell us? Because I know that's looking back, at last month and things like that. So, I mean, what could that report tell us, Scott?
Yeah, lower placements yet again, and some of that's going to be tied to Mexican border stuff as well. But that can be a sign that, some of these heifers are not coming into the feed yard. But the 99 on feed estimate kind of made me scratch my head just a little bit. It just does. We don't feel like we're at a 99% on feed kind of a number. So that's what I'll be kind of looking at here to say, okay, what does that even look like? Because if we're this tight, this current, selling cattle easy, to still be at 99 is pretty impressive. So that's where I'm going to be kind of targeting what I'm going to look at there.
Scott, you mentioned war and stuff earlier. Obviously, that's having an impact broadly across these markets. Crude oil's been reacting, which we would assume with tensions in the Middle East. You look at the grains and oil seeds. They've had a pretty good day Tuesday. We got that EPA RVO news last week. I guess when you look broadly at the grains and the outside markets and the headline news that's out there, what are some of the big things you're tracking right now across the rest of the complex?
Yeah, it was the possible war story, Israel striking Iran, and how involved are we going to get? I mean, that took the headlines right away after the weekend. And markets that we deal with here, you can wake up any morning and you're going to get slammed by something new that was unexpected. And that's what we saw. So that kind of took the headlines and really changed these outside markets and added a little bit of nerves. And I think for the grains, as we kind of broader picture that I don't think that was the worst thing for them, because if we were just talking weather, we're looking pretty good. Our crop's in great shape. It needs that demand story to really try to kick in to bail some of these prices out. We've been, slapped with, big acres and weather and tariffs, to death. And we finally have something else to look at. Energy market catching a good boost here. We get some of those good stories on the energy side. So that might be the shot in the arm we needed, at least to, get us back to the top side of a range. I don't know if we're ready to just crack out of the top side, but it just needed some new light on it, something on the demand side to help it out. And this could be the thing that does it, because that last grain report, we're not sitting on large ending stocks here. They're manageable numbers. And if we can throw some extra demand at it, hey, that might be the shot we needed.
Very true. Very true. Anything final, Scott, you would mention or reiterate to folks on the show today?
I'm just trying to keep her between the ditches here. You guys need to be careful out there. These markets, the volatility has just really increased, and how we've marketed over years might have to change a little bit here because of the amount of risk that we're handling. So, whether that's spending some extra money on some kind of puts or whatever it is, but it's challenging all of our marketing plans here, as wild as these markets can do and how fast they can move. So just being careful, trusting who you work with is definitely another point to make there.
Scott, if folks want to work with you and your team there at KKV Trading, what's the best way to reach you?
Yeah, give us a phone call. You can just Google us, best looking brokers in Sioux Center, Iowa. I think our name should be near the top there.
I know folks can go to kkvtrading.com as well to find more information. Scott Varlick, Quim Varlick in Sioux Center, Iowa. Good to talk with you again, Scott. Thanks for joining us on Market Talk. Have a great week. We'll talk to you again soon.
Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.